All right, ladies and gentlemen, I have Brock Pierce on with Crypto Blood. Many of you probably don't know who he is. I'm just joking. Brock, how are you, man? Thank you for joining me today.
Well, I'm doing great. I'm grateful, and
Yeah,
it's good to be here. It's good
yeah,
to see you.
yeah. Thank you, man. Thank you. And so, Brock, of course, most of you know, he's the chairman of the Bitcoin Foundation and Blockchain Capital co-founder. He's funded a lot of different projects in the space. You were part of Mastercoin. I remember Mastercoin back in the day. That was actually really the first ICO model. A lot of people may not know that. We can talk about that possibly. And you're doing a lot of philanthropic endeavors as well around the globe. We'll talk about that. And of course, we're going to talk about EOS or EOS, as many people pronounce it. And lastly, what I really had you come on to talk to my audience about is this FUD, man. This FUD that's going around about you being a pedo. I like hitting things right at its point. I don't jump around. I like to get things from the source. So I guess you saw me on Twitter having a Twitter beef with a few people regarding EOS, you. And I'm just like, show me the proof. I want to see what you're talking about. And you kind of chimed in and jumped in. And now we're here, man. So again, thank you for joining me today.
Yeah, again, glad to be here.
So we'll kick it off, Brock, with you, man. Just tell us how you even got into the space. Before we started the interview, you talked about how really you got into the whole digital thing back in the 90s. I know you had your run in the .com era. Kind of just give us your background, how you got to where you are today in Bitcoin and cryptocurrencies.
Well, I've been a gamer all
Okay.
my life, and so it started with games. All sorts of, I built every lemonade stand business I basically could as a child, and I got into the technology space as a teenager back in the 90s in the dot-com boom. And in 1999, you had some of the first networked games. I mean, you had Muds and Moos before that, but the beginning of what you'd call massively multiplayer games.
Mm.
And inside of these massively multiplayer games, as persistent worlds, if you acquired assets, digital currency like gold or platinum or whatever it might be in that game world, if you acquired houses, swords, shields, armor, whatever it might be, when you would log off from that game and log back in, you would still have your things. It was persistent in nature.
Right.
And because it was persistent and because the items were alienable, meaning you could transfer them from one player to another, a market emerged. Just because these things were intangible didn't make them any less valuable.
Right.
And that was a really novel insight at the time. And I just remember talking to people. They're like, why would someone want to buy, a digital sword? That makes no sense to me. How does that have any value? There's no intrinsic value in any of this. And I'm like, well, you play golf, don't you? And they're like, yeah. I go, do you like to have good golf clubs or do you like to have really bad golf clubs? They're like, I want great golf clubs. I go, well, if playing World of Warcraft was your thing, you'd want a good sword.
Right.
So it's not about whether it's tangible or intangible. It's about, does it provide
Perceived
utility
value. Yeah.
or life? Or does it provide you a social status in the same way some people want a normal car, some people want a Lambo, right?
Mm-hmm.
Whatever it is that motivates you. And so I was one of the first people in the world making a market for in-game assets, and this started in '99, and eventually by 2001, 2002, it had become my primary focus, and I ended up building the largest business in the world for the buying and selling of these in-game assets. I was PayPal's largest customer for years. Wow. I helped put together Alipay through China. I had 400,000 people in China playing video games for me to mine digital currency that I would sell. I went into Korea and rolled up the market there. I had 90% market share for a very long time. And so I was the world's primary market maker for in-game assets. And my main investor in that business was Goldman Sachs, but specifically Goldman Sachs Principal Strategies. Mm-hmm. GSPS was the black box of Goldman that was responsible for 40% of their earnings. This was like this was the black box, or where all the brains of Goldman Sachs's trading was.
Right.
And I was their first private investment they ever made. And that's because I ran a more complicated proprietary trading operation than they did. I was managing more markets, because if you think about a game like World of Warcraft with thousands of servers, you can't transfer an item from one server to another. So every server was essentially its own economy. And even though they all had gold, it was all an individual market. You know, I can't move gold from one server to another. So in World of Warcraft alone, I'm managing essentially the equivalent of thousands of countries. You know, if you think of these virtual worlds as, you know, digital nations.
Right.
And you had to have inventory, you had to have delivery. It's not like today where I can send, you know, Bitcoin from one address to another. In a video game, we actually had to have warehousing to store all those items. And if someone made a purchase, we had to deliver it like a digital FedEx. You know, someone would log into the game, grab the item, and then actually deliver it to the customer inside of the game. So, I mean, crypto by comparison is very easy. So different challenges, but
do you remember? Do you remember Second
the
Life?
Last 20 years.
Do you remember Second Life? That was one that I used to play.
Yeah, so Philip Rosedale of High Fidelity. So Philip, the founder of Second Life, was also the co-founder of Real Networks. He was the founder
I remember
of CTO back in the 90s, one of the first and main media players. And so Philip came to me before the launch of Second Life and said, Brock, everything that you're doing is in violation of these end user license agreements. I want Second Life to be the first game in the world that gives our users property rights. We're telling our users that if you accumulate assets or you create assets in our game world or in our virtual world, we're going to give you those rights. You have the right to own that. You have the right to sell that. You have the right to keep the remuneration that you receive for that transfer. I said, I love it. He's like, well, you're the, kind of the godfather of all this stuff. How do we do that? And so I made all of the market for Second Life in the beginning.
Wow. Yeah.
And so I did that for every game in basically every country in the world.
Many people don't know, Brock, that at one point that was an on-ramp. Second Life, the Linden Bucks, was an on-ramp for Bitcoin, to purchase Bitcoin. Do you recall those days?
Yeah. I mean, again, it's all digital currencies.
Yeah.
When you look at the space today, there's multiple industries that were the precursors to this. Clearly, the video game space, like what we've just talked about, which is probably the primary driver of adoption right now in our sector today. But you obviously had, the cryptographers that were, driving, the cypherpunks and all that crew.
Yeah.
You also had, call it the frequent flyer miles and all the affinity programs that helped develop some of this, the idea of closed loop and open loop systems, peer-to-peer networking. I mean, there's a bunch of industries that essentially in aggregate, came together to form what is the industry that we're in today.
Yeah, that's cool, man. So as far as when you had your involvement with the .com era, I see nowadays, especially like in 2017, I saw a lot of the same behaviors that were reminiscent of the .com era occurring in this crypto space. Is that something that is of concern to you? Do you feel like money, well, at least last year, it was real hot and it was just throwing any and everything at these ICO startups? How do you feel about last year, and really, how do you feel about the cryptocurrency space today, as far as VC funding and all of that activity? Because you're really close to that.
Yeah, I mean, there's definitely aspects of the market that feels a little bit like 1999. When the internet was at its sort of peak. And that happens anytime you see these sort of asymmetric returns.
Correct.
You're going to get the market, it's animal spirits are out in full force. And, everybody's like, which is why if you followed any of my talks over the last 5 years, you'd see that my narrative changed substantially when the market sort of started to moon. And that was to explain to people that money doesn't always make people better. Money sometimes has a way of changing people, and again, not for the better. And so a lot of my conversations and a lot of my talks have been, never compromise your integrity. It's called keep your feet on the ground. It's not about the Lambos. We're here to, we have the potential to radically change the world for the better. And trying to keep people focused on, call it the broader or greater mission.
So do you feel like you saying that this cryptocurrency, this blockchain community is to really help all of us for the better? Is there a compromise with allowing? I don't know how you feel about the legacy system. Like I know you had business relations with Goldman Sachs, and you've got a whole bunch of different capital entities or institutions that are now seeking their stake, their hold in this new economy. Are you afraid? And I am. I'm afraid that eventually, as this market matures, that we will see the big guys come in and push out all of the little guys, and really, what Bitcoin and cryptocurrencies were here to do was like level the playing field, right? Bank the unbanked. That's what a lot of the talk that I used to hear when I first got into cryptos. Do you feel like that may be in jeopardy?
No, I think that everything is on track. And I'm happy to see, call it the incumbent world, the legacy systems participating. Okay. You can't really change the system from the outside, throwing stones. Mm-hmm. We'll be much more effective in, call it upgrading the system, evolving the system, from the inside to some degree. Call it a win-win scenario, the old and the new, coming together, because it doesn't just, the world doesn't transition from old to new. There's always this sort of hybrid that exists in the middle. And what you're seeing are the bridges that are being built between them. Mm-hmm. This is an open source technology. This is a, peer-to-peer network that does all of the things that we're talking about. So I don't see a scenario by which the system can be captured. And so I think anytime we're seeing progress, whether it be one small step or one giant leap, it's all progress. Okay. And as long as we're continuing to progress everywhere, the better. And I think the incumbent world recognizing that this, and participating in the progress is an overall good thing. And I do fully believe, in terms of the unbanked, I used to always have these conversations in the early days. People would come up to me having read some sensational headline, in the media, mm-hmm. thinking that they, know something, forming an opinion, and likely hadn't even read the article from, top to bottom. People have a way of kind of jumping to conclusions and thinking they know things, based upon very limited data points and often inaccurate data points. Right. That's, the media has a way of doing that. And so they'd be like, Brock, why should I want Bitcoin? Isn't it only for drugs? This is bad. Why, they'd have some sort of preconceived, very negative opinion based upon limited data. Mm-hmm. And they'd be like, why should I want it? And I would always use this sort of reverse psychology, sort of thing on them. And they'd be like, why should I want it? And I'm like, you shouldn't. And they're like, what do you mean I shouldn't? I go, well, it's not for you. And they're like, what do you mean not for me? I'm like, well, do you have a bank account? And they're like, yeah. And I'm like, I'm guessing you have a piece of plastic in your pocket that lets you conveniently pay for things. Mm-hmm. And they're like, at that point, it dawns on them that I'm like setting them up. And yep. They're like, yeah. And I'm like, and you've got probably faith in the system, and you've got mm-hmm. rule of law that's here in theory to protect you. And of the 200 currencies in the world, you've got one that everyone wants more of. Right. This isn't going to change your life unless you're a speculator. And based upon what you've told me so far, I'm guessing you're not going to be speculating. And the only piece of good advice I'd give you is don't short. Right. Even though you're negative, you don't want to be shorting this thing because, it's just not a good idea for you. No. And I go, because if you're not going to speculate as, call it an average American that is well off, that takes most of these wonderful things they have in their life for granted, mm-hmm. Like banking and credit cards and things of that nature that most of the world doesn't have, that it's only going to improve your life by 1 or 2%. And my guess is that you don't get up every day to clip coupons. Right. And so I'd have these sorts of conversations and I'd say, did you know that there's 70 million people in the United States that are on or underbanked? And they'd be like, what? I go, yeah, there's 35 million people that don't have access to banking in the United States and another 35 million that are underbanked. And a lot of them are not allowed to open up accounts. They're basically blacklisted. Correct. And when that happens to you, you're stuck with,
green dot cards and
check cashing. Yeah. And you're basically put into this downward spiral that you can't really get out of. And that's just in the United States. Let's talk about south of the border. Let's talk about Africa. Let's talk about Southeast Asia. There are 3 billion people on the planet that don't have access to financial services. There's another 2 to 3 billion people on the planet with limited access to financial services. We're talking about, 2/3 of the population of the planet. We're talking about the majority,
Yes,
of the world doesn't
absolutely.
have the basic things that we have.
Right.
And so this technology will democratize the global financial system in a way where every human being on the planet will have equal access, and the least fortunate billions are going to be the biggest beneficiary. And my main mantra is that a billionaire isn't someone with $1 billion. It's someone that's positively impacted the lives of 1 billion people. And that's my mission. And I think that the unbanked is where that's going to come from.
So to speak to that
financial inclusion.
Right. But to speak to that point, do you feel like the volatility of these cryptocurrencies will be a benefit or hinder the unbanked? I think that we need to see some type of crypto that has maybe some ongoing float, some ongoing supply to keep things steady. Like, what are your thoughts about, like, I think you're part of Tether and those type of stable coins. Is Bitcoin going to be used? Because at first, like 5 years ago when I got in, I'm like, oh man, this is great. This is going to change the world. We're going to use Bitcoin instead of dollar. And, that was kind of the narrative being pushed back then. But now it seems to be shifting to more so, okay, maybe this is digital gold and we won't use it for everyday payments. Where are we going with that? That's what I really want to see is that everyday utility for cryptocurrencies for the unbanked.
Yeah, so I think that most importantly, it's still very, very early days. For those of us that are deep in it and you've been around for years, we feel that it's kind of maturing, but the reality is it's still a very small percentage of the world understands it. Very small percentage of the world is using it, though it does feel like we've reached the tipping point, and we're seeing that, coin market cap going from 250,000, monthly visitors to 160 million kind of tells you everything you need to know. The tsunami is coming, and it could come fast in the same way that, social networks and messaging apps can go from 0 to 1 billion users, in a couple of years now. It's possible that we could go from 0 to 1 billion users in a year or two. Now, I don't think that the basic infrastructure is there in a way that, that'll happen yet, but I think we're getting close. So again, the main point there is it's early days. Yes, the volatility is going to be a big problem as a currency or a medium of exchange. And that's why things like stable coins existed. Tether was, my idea. And the idea was to put real world assets on the blockchain. No one had really done it at the time. And everybody, all my friends in the business were like, Brock, you're nuts. Why would anyone want that? We're against, dollars. I'm like,
yeah, well, you say that, but you look at this bloodbath. You would have loved to have been in Tether.
Exactly. So
to accumulate more
I said there's a lot of reasons why a stable coin is going to be needed. And, I think that the proof is in the pudding. And so that was a really interesting thing because it was the first, call it successful stable coin. It was the first example of putting a real world asset on the blockchain. So it was really pioneering in many ways.
Right.
And we've learned a lot from it. So I don't think that there's going to be a one size fits all. I don't think there's going to be one token to rule them all. I think that there's going to be multiple blockchains. I think there's going to be multiple tokens. And in the long run, I don't think it'll even be something like Tether. I think it'll end up being a basket of a combination of cryptocurrencies, a combination of commodities, and a combination of fiat currencies, and maybe even a combination of equities like Apple, right? If you wanted to create the most stable thing, it will be a basket of assets.
Almost like an SDR, like a SDR 2.0, something like that.
Exactly.
Yeah.
And so I think that, again, I don't know I don't have a crystal ball. I can't tell you how the world is going to evolve specifically, but I can paint you a picture. I can paint you a number of pictures to show you kind of the potential, futures that, we may end up creating together.
I have other questions regarding, you talked about Apple. I'm going to try to stick to my outline. Maybe I'll have you on again in the future because I wanted to touch on, I always wanted to pick someone's brain who's really been in this game and see what they thought about equities on the blockchain and how that would work. But we'll leave that for another day.
I would be happy to come back and do that. So I was the first person to create a tokenized security with BCAP. So
Okay. Yeah, we'll have to talk.
I've done a few of these things, like the first ICO with Mastercoin, the first real world asset, the first security. I mean, I I I I enjoy kind of pioneering new markets. That's really what my primary focus is most of the time.
That's sweet, man. Speaking of ICOs, that was one of the points I wanted to talk to you about. Of course, Mastercoin. If you want to tell some of the individuals watching may not know about Mastercoin, how that all came about, tell us really briefly about that, and then I'll have a question regarding ICOs and the SEC. I really want to ask you a few questions on that, but tell the viewers about Mastercoin and how that really kicked off this whole ICO idea, really.
Yeah, so Mastercoin was kind of, in some ways, the Ethereum before Ethereum. It was built on top of Bitcoin. So if you think of Bitcoin as TCP/IP, Mastercoin was basically HTTP. It was the application layer that allowed you to build dApps on top of Bitcoin.
Mm-hmm.
And so that was what Mastercoin was designed to do. And Mastercoin was the first ICO. The ICO model was architected as Mastercoin, and so I was one of the founding board members and maybe the largest contributor Bitcoin into the token sale. And so the first ICO was in August 2013.
Okay, cool.
And then there were a handful of other ICOs that happened, and then eventually sort of Ethereum came along that said, well, instead of doing this on top of Bitcoin, let's create a new blockchain to do this, because Bitcoin lacks, call it, some of the extensibility to do the things that we think the market will need.
Right.
So Vitalik was involved with Mastercoin, and eventually it was through Mastercoin that Ethereum was born.
Great. So what are your thoughts about this here ICO? We had the explosion in 17, and we see the SEC coming in really hard now. It looks like they're eyeing all of these ICOs. I feel like, again, so me personally, and just want to make this relatable to everyone, I founded 2 startups, right, and went through a year or 2 of trying to find funding for our startup. Pitched it to XYZ, even MC Hammer. I mean, angel investors, VCs, everyone. Too legit to quit, man. And we couldn't get any funding, right? And great idea. I think some of it had to do with just it's an exclusion. If you're not on the West Coast, man, or on the East Coast, you're not getting a lot of that funding that's needed, especially by minority startups. But my question is, I felt like ICOs was really going to be that thing to level the playing field, and now it seems like with the SEC coming in, it looks like they're going to start making people be accredited investors. So we're right back to what the legacy system was. What are your thoughts on that?
I think that what you've said, I think we are leveling the playing field. I think we are democratizing, call it, access to capital by innovators, pioneers, entrepreneurs. And so I often talk about this. And so one of the most important things I would say is, historically, if you wanted to be an entrepreneur, if you wanted to be a dreamer, if you had a vision for the future that you wanted to try and manifest, to do that, you basically had to be on the West Coast of the United States. And that's because that's where the capital formation was. You need to be where the money is. Because if you don't have access to the capital, or you don't have access to a sufficient amount of capital or resources, the likelihood of that dream becoming a reality is low. Mm-hmm. And so this is one of the biggest things that the ICO or these sort of crowdfunding models are enabling, is it's changing the capital formation sort of process. It's no longer a US thing. It's no longer just a West Coast thing. If the next Mark Zuckerberg, if the next Vitalik Buterin, if the next Dan Larimer, happens to be in Africa, Southeast Asia, Latin America, Eastern Europe, you can be anywhere. It's basically allowing dreamers from anywhere in the world to, potentially make their dreams a reality. And that's a huge, huge deal.
But it seems like
great visionaries are born in, some parts of the world and don't have the ability to travel, those dreams were never going to become a reality. Now, innovators from anywhere in the world have the potential to impact the world, to a very large extent. So this is huge when we talk about leveling the playing field and democratizing the world of innovation. So
I guess I'm like first world issues here. I guess I'm speaking of it from the standpoint of an American. Yes, I definitely see it leveling the playing field for everyone else, for sure. And I love that. I love that.
We have it tough in the U.S. and it's, as you said, the U.S. is the most regulated market in the world, right. And change doesn't just go from from 1 to 2. There's a process. It's kind of like it goes from more like the alphabet from A to Z,
right?
And the process isn't like it just flips the switch and you go from the old to the new overnight. There's a process,
right.
And it takes time. And so what we're seeing is some of those early sort of growing pains, some of the, the early transitionary period where, regulators are saying, well, I've got a job to do and you shouldn't be upset with them for doing their jobs.
Right.
That's their job. and most of them are well-intentioned and doing things for the right reasons and trying to do it the right way, which is never an easy thing, right? You're always going to offend someone, haters going to hate. But the U.S. as, kind of the most regulated market is always going to be the most challenging.
So how do you see that panning out, like in the future once things settle? You talk about that gradient that it's not the binary event type of thing. How do you see, let's say 5 years down the road, like what does it look like here in the U.S. for individuals that want to use ICOs as a means of raising capital?
Well, so right now you have, call it a lot of uncertainty, a lot of regulatory uncertainty. And, one of the things that would benefit, dreamers and visionaries more than anything is just clarity. What are the rules? What are the boundaries, that confine, what it is that you want to do? And what are those boundaries today? And what are those boundaries, tomorrow? 5 years from now is a very long time and a lot could happen. And innovation is happening all over the world. And so clearly as a regulator, your view is, how do I protect consumers? How do I prevent, money laundering, terrorism, things that, they might, things that they typically are supposed to be focused and concerned about. So how do they balance, solving, for those things while at the same time allowing innovation to occur? They're not trying to stop innovation. They're trying to, it's a balancing act.
Right.
And so, clearly the U.S. doesn't want the entire blockchain market leaving the United States and abandoning it. That is not their intention either. And so they have to, at the same time, make sure that they're doing their jobs effectively, serving the constituents in which they're supposed to serve, while at the same time allowing innovation and progress, to flourish. And that's the challenge. That's what everybody is kind of witnessing right now is they're seeing how the sausage is made. I would imagine 5 years from now, all of that will be really clear. And it will be, providing, it will be regulators, informed regulators, creating new probably regulations that allow them to, accomplish what they have to accomplish in their jobs, while at the same time giving the entrepreneurs, visionaries, dreamers, and innovators the tools that they need so they can be effective. The U.S. doesn't want to be, become North Korea.
Right. Okay, that sounds good, man. So I guess we can move on to one of my favorite projects. I've been following it since, July of last year. EOS. I call it EOS. I have to continually try to remind myself not to do that. But EOS.
I think you can say either,
okay.
And I think it'll always be done that way.
Yeah, probably right. So EOS went live 2 days ago now. Tell us about your involvement or your prior involvement with the company from a more strategic standpoint. I know you're still involved with just the community because it's open source, right? It doesn't, you don't have to be on the board or a part of the organization anymore. Block.One has released this software into the wild, and now the community will start to build this thing out. So just give us your involvement and how you even got into doing this whole thing with Block.One.
Yeah, so I mean, I've obviously been in Bitcoin for a long time now.
Right.
Been involved with Mastercoin and all the things. I was one of the largest contributors to the Ethereum crowd sale and been a huge supporter of Ethereum. I made the first venture investments into into that area, and I've been involved in many of the blockchains and many of the tokens, formally, informally, because my view is if anyone succeeds in making the world a better place, we all win, right?
Yeah, absolutely.
And so EOS or EOS, is just another one of these sort of next steps in the evolution of the industry. I tend to take a neutral role in the sense that I'm a big fan of it. I continue to be a huge supporter of Ethereum and continue to be a huge supporter of many of the chains. I don't believe there's going to be one. Right. I believe that there's going to likely be a number of them because they're designed to serve different purposes. And so how did I get involved in Block.One or in EOS?
Block.One, yeah.
Well, Brendan Bloomer, the CEO, is a longtime friend of mine. I bought his first company when he was 18. Okay. He's 31 now. So he worked in the digital currency market with me pre-Bitcoin. And so naturally, these are my longtime friends and partners.
Right. Okay.
And so I got very involved, in supporting the early initiative there. And in a typical fashion, I don't like having my hands tied. I don't really have many titles. I mean, I have lots of titles, but I'm not trying to, be affiliated with any one project. I kind of support everything, right. In the same way, like, I started the first venture fund in the business. And so I was the most active, equity investor in the ecosystem for a long time. I've made over 100 investments, and, I'm an investor in Coinbase and Kraken and, many of the exchanges. And people would be like, well, how can you be an investor in more than one? Aren't you? I go, no, that's an old world mentality. Right. To say that only, if I'm involved in, an investor in Coinbase, I can't invest in anyone else trying to do the same thing. That's the old world mentality of scarcity that suggests that you have to lose for me to win. We're talking about changing the game here. We're talking about changing the game to a world of abundance.
So I'm not familiar. I'm not familiar how this whole process goes in like this new blockchain movement and investing and stuff. How do exits look in blockchain? Like, typically, yeah, go ahead.
Yeah. So, I mean, in the old world, I mean, yeah, exits there's not going to be many. In the old venture model, you would invest in a company, and then one of two things would happen if successful. Right. It would get sold to another company, a larger company, most likely, or it would go public through an IPO. That whole game is starting to change too. But when we were first making equity investments, the assumption was that, the PayPals and the Goldman Sachses and the American Expresses would be buying some of these businesses. This is back when we started making equity investments in 2013. So that's when, I co-founded Blockchain Capital.
Right.
It wasn't called Blockchain Capital at the time because no one used the term blockchain back then. It was called cryptocurrency. And specifically, it was all Bitcoin because it was Bitcoin with a little b to describe the underlying.
I remember that.
Big B
with the blockchain
to describe the underlying technology. Which talk about from a consumer marketing perspective. You want to talk about like confusing? There's no way you're ever going to get mainstream adoption. Literally, capitalization of the letter B. Is how.
I remember that, man.
That's called cryptic.
Yeah, exactly. I remember that. That's hilarious, man.
But I changed the name of the firm from Cryptocurrency Partners to Blockchain. Kind of when the whole industry first transitioned away from, Bitcoin with a big B into blockchain as a way of describing the underlying technology, which was really just a marketing move. At the time, the incumbent world couldn't be affiliated with Bitcoin. But they loved the technology. They said, actually, I mean, you talk to the banks, they're like, we love it. Right. But we're not allowed to, we can't touch Bitcoin, but we love Bitcoin technology.
Yeah, you would hear the talking heads on CNBC all the time say that. I don't like Bitcoin, but blockchain technology is going to be great. I would always hear that. Yep.
Well, so that was a group of us basically, facilitated that marketing change, kind of the rebranding of the big B to something that had a different name. And in the end, it was a really smart decision to, change it from capital B Bitcoin to blockchain. I think that's one of probably the most pivotal moments in the industry in terms of it went, because everybody, in the incumbent world was hating on Bitcoin. but you weren't giving them an opportunity to really say, but here we see some opportunity. You had to give them you had to open the door for them to say something positive, and they wouldn't say anything positive about Bitcoin at the time. And so it was call it a rebranding.
Yeah, that's what's up. Okay.
And so it was, it was a really good move at the time.
So, back to the whole EOS thing, a lot of the FUD that I'm hearing, man, in particular EOS, is they raised $4 billion and now they did that so they can crash ETH or Ethereum. They're going to sell it all and crash, and it's all a scam. Kind of explain, because I know that EOS or Block.One really didn't need the money per se. Like, they already were you guys were funded prior to starting the actual project. So kind of explain, what is the $4 billion used for? I mean, I know a little bit, but kind of explain what the whole roadmap for the $4 billion, so people can stop the whole FUD thing about it's a big conspiracy.
Keep in mind, Block.One, didn't choose to bring in $4 billion. The market did.
The market did. Exactly.
The community did.
No one put a gun to anyone's head.
400 million, 40 million,
right.
or 4 million.
Right.
That wasn't Block.One's decision.
Yeah.
The community voted with their wallet, literally. And so, it's very easy to talk nonsense, but that's the market's decision. The market made that choice. And yes, Block.One had already raised the money to build EOS. It didn't use any of the token sale to finance the development.
Right.
But yeah, no, resources are a good thing. I think it's great that Block.One has a ton of resources. With those resources, Block.One should be able to do amazing things to help move the overall ecosystem along. And I think the idea that, crashing ETH is, again, it's one of the most foolish FUD-like things. Block.One is one of the largest ETH holders in the world. Why would Block.One want to undermine itself? That's kind of like if someone owned 1 million Bitcoin, and let's say they were a fan of Bitcoin or Bitcoin Cash, right? Saying, well, they're going to sell it all to crash Bitcoin or crash Bitcoin Cash.
It ends up being a net zero for them.
In the process is crash them both and cause a flippening to Ethereum. These are ridiculous ideas that are not founded in any truth. This is, crazy people that don't know how to use their brains.
Okay, so explain. Here's another.
And by the way, Block.One and EOS, is generally, everybody I know in that organization is a fan of Ethereum. So, one of the most important things we are here as a community trying to make the world a better place.
Right.
There's too many people that are acting like religious fanatics. My blockchain is better than your blockchain.
I see that a lot, man.
We're supposed to be here to collaborate. We're here to support each other. We're here to be a community, an open source community, and rise together. Rising tides raise all ships.
Yeah.
In the same way Vitalik was helping out EOS, we should all be supporting each other.
Right.
And stop with this sort of fanatic, my stuff's better than your stuff. That is not the way that you make the world a better place. And I don't know anyone at the higher levels of Ethereum and at the Ethereum Foundation, and I don't know anyone at Block.One that is trying to harm Ethereum or Ethereum trying to harm EOS or EOS. I don't see that. And I talk to obviously a lot of the higher ups.
Absolutely.
That is the community, and it's normally the Lambo buying, people that are making these types of comments. It's not it's not the stewards, that are actually building the stuff and trying to make the world a better place.